Good. Hello. Good. We are live now. Exactly. Okay. So we are live now. Yes. So we are talking about market structure. What do we mean by market structure? Which is a very important question. Before anyone trades forex, you need to understand the position of the market, position of the buyers and sellers, which is very, very important. Yes. You need to know whether the market is up or whether the market is down. You need to understand all those things. These are the very important facts we need to consider first of all. So, by the time we get to know all those, it will now help us to determine where to take our position. For example, are the buyers stronger than the sellers? Or are the sellers stronger than the buyers? Or are they both equal in any position? Or are we supposed to sit at the fence? These questions will be answered by accurate knowledge of market structure. Now, as you can see from the chart, now we are on dailies. We are using GBP USD dailies. Okay, let me check. Let me go to Euro USD. I think Euro USD is another important. Okay, let me use Euro USD. Yes. So the first thing we do, let me remove every indicator I want to remove. Okay. Good. So if we go to weekly chart, we check what is happening from left hand side, because you know the past determines the future. The forex has memory. It remembers past events so that it can repeat some certain behaviors. Okay, now let's take, for example, let's start from here. Let's start from here now. From this area now, we have a bear market. If you check this area on the weekly now, the market started going down. It went down here. We have the peak here. Then it went down to this place. This is where it formed a lower low. It tried to move up, lower high. Because when a market is trending down, or when we are in a bearish phase, the market will form what we call lower highs and the lower lows. So from here now, the market was going down here. When it got here, it moved up here. Okay guys, sorry, permit me to shift my, because I am outside and it wants to rain. Let me move my table inside because of the rain, to avoid the rain destroying my computer. Yes, let me go a little bit inside. Okay, just hold on, let me get my seat. Okay, I'm back now. So based on what I'm saying, it got here, then it now busted the previous swing, which is here. It formed a lower low here. Look at it, formed a lower low here. Try to move up again. It couldn't surpass this line. Okay, then it moved down again here, which is another lower low, which is also a sign that it is continuing to go down. So every opportunity we'll be looking for now is an opportunity to sell, unless if the market could mitigate this area, cross above this swing, this previous swing low, this lower high, which has formed as a kind of resistance, but it could not. Look at it here. It tried to move up, it couldn't take out this area. Rather, it moved down again. It got here, tried to move up, it couldn't take out this again. Instead, it moved down again. Look at it here. This is what it was doing until, look at it, when it got to this area now. When it got to this area, it moved up. Look at the swing. It took out this lower high. So in this situation now, we will now say that the market has made a higher high. Once it has made a higher high, if okay, look at it here. From here, it took out this one, made a higher high, and this is where it stopped. Okay, then it tried to form another low here now. Look at this low, and if you check now, this low now is higher than this previous low. So we now have higher low. What we have in now is higher low instead of lower high. Okay, then it moved up again, try to come down. The lowest point could not surpass the previous lowest point, which is the sign of a bullish market. So these are how markets can turn from bullishness to bearishness. This one now turned from bearishness to bullishness. Okay, it moved here, came down here, which couldn't take it out. It made a higher high. Immediately after here, the market broke this area. Have you seen it? It broke this area now and made a lower low. It has also turned again into a bearish market. So in this case now, we'll be looking for again how to sell instead of buying. But we can't enter our trade in the weekly chart. Now let us delete all this and focus on the most recent. I just use all those horizontal lines to indicate to you how the market phases can change. Okay, so before I continue, I want somebody to ask a question if there is any. So that's exactly what I'm waiting for now before we continue. So I'm waiting for some reactions. Okay, no question so far. Let us continue. There's something I want you to understand. There's another way to there's in addition, I want to draw this. This is called a trend line. We use it to determine when the market structure has also changed. If you check here now, now this trend line now, if you check, the market has been, I connected it from this week high, this high week, and it touched all this down here. The market was respecting it until it busted it. It busted it at this particular point. After busted it at this particular point now, it is broken. We cannot enter immediately. It moved up. There was a rejection. Then it moved down. But the buyers refused. When the buyers refused, they pushed it up again. That is why you have this candles. Let me just hold on. Let me zoom in so that it can be okay. Look at it now. Immediately the buyers rejected the market from going down. So this was an opportunity. Remember, the market has been respecting the trend. Immediately the first time it broke, the trend broke. We won't enter. We must wait for a retest, which happened. So it went down, but the buyers pushed it up again. So this was a perfect entry. So from here now we know that bearish trend is over. So immediately here the market continue going up. That is why it is not advisable for especially beginners to start making use of indicators. When you trade what we call the clean chart, almost naked chart, you see everything very clear. Everything will now be very, very clear. Look at what is happening. So it moved up again. The market moved with momentum. Where we see is only C. This is the only, it tried to move down here. You understand me? Look at it. It moved up. It took out the recent high. Then it tried to retrace. We call it retracement. Then there's something we call Fibonacci, but I will introduce it very well next time. But let me just for the purpose of this, when we are on a uptrend or downtrend, we can use it to enter our trade. So these areas are very important. 50, 61.8 and 78.6 levels are very, very important. Okay? But I will explain this one. This is going to be a different tutorial altogether. So if you check from here, look at the high of this now. The market tested, retraced up to 78.6 levels or areas. So this is an opportunity to make additional money. So before somebody can enter any trade here, assuming the person is trading on the weekly time frame, you make sure there's a change of market behavior or structure. We call it change. Okay, some people call it change of market character. Change of character. Watch out from here, or it retraced here. We enter. We can even enter with this candle now. We enter. Then we now put our stop loss below. We check below this low, this swing low here. It moved up. Then it tried to move down, but the buyers rejected it. It tried to move down, they rejected it again until the market kept on moving. Then by the time we see all this doji, it can be an opportunity for us to disappear. Yes, we exit our trade. Then it came down again. Look at huge candle. It continued. We will not enter any, we will not look for any selling opportunity until it breaks this resistance. Remember this recent swing. But rather, it made about 78.6% of retracement. So after that, the next thing we found out is a bearish candle. So we enter, and it took out this high again. Okay, having taken out this high, we now try to find out. We mark this area. The market continue going down. So there's no opportunity for us to enter any buy until it came to this particular area again. So we can now enter our trade again. So this is how to identify a change of character or change of structure. So I'm waiting for some questions based on what we have learned before we continue. Any question? Feel free to ask your questions now. Okay? Any question? Okay, no question. Let me continue. Okay, let me remove all this. Let us still check the same market structure based on our daily time frames. Okay, let me pick daily time frame. This is daily time frame now. We are going to start from here again. Okay, The market started from here. Okay. This is the highest point. It moved down. Then after here, it tried to move up. But as you can see, this swing high is lower than the previous swing high. So we say that the market has made a lower high. Then from here, it moved down all to this area. Look at the next place now. It moved up to this point. Okay, up to this area. Down to this area. Then he tried to move up again, but he could not cross this area. It still came down until made what we call a lower low again. Then at this point in time now, everything tried to change. Look at our recent swing high. Our recent swing high is here. So the market busted it. After it busted it, it made a lower high because this low is higher than this low. It moved up. Then again, it tried to go down, but it couldn't. Okay? Look at it. Then at this point in time, this high here has taken out the previous high. So this Euro USD now is in uptrend. It is in uptrend based on dailies. Let me summarize. I'm going to summarize this market structure before we enter into resistance, support, and the rest. I want to use 4 hours to summarize. Look at this chart now. This is a very good chart. Let us start from here. I want us to start from this particular area now. Look at where we are going to take as our case study. Okay? From here now, the market it bottomed here. We have a kind of triple bottom here. When the market came to this area, I want you to check it very, very well. In fact, let me zoom in. I want to zoom it in more. Aha. See this area very, very well now. Now we have a kind of, the market got here. Let us mark this area. Very, very important. Okay, let me use rectangle to mark it. Okay, now look at here now, because we have a kind of we had a kind of little swing here before the market continued going down. Because if you check here, the market wanted to formed a kind of double, what do I call it, double bottom here before he took it out. So here was a very, very important area. When we mark this area here can be our resistance. So until this price action takes out this supply area, because another name for resistance is supply, we call it supply area, then demand is referred to as, okay, we have support and resistance. Okay, so this area now, we must wait until the market takes it out. It tries to take it out here, but it could not take it out. It went down again. It tried to take it out, no way. So on this area now, we have found what we called this is called, oh, just hold on a little, let me remember what it's called, because in this particular area now, both demand and both the buyers and the sellers are equal. So they are equal. Nobody is winning. It is called a ranging market. Yes, I've been thinking about it. Ranging market. Remember, I've practically touched about trending market, bear and the bull, bearish or bullish, which we can say that when we mean bear, bullish market, we mean that the market is trending up, moving up. When we talk about bear or bearish market, we are talking about that the market is trending down. Good. So in this ranging market now, to trade this market, you must wait until it gets, if it gets here, you can go to a lower time frame like a minute or, sorry, 1 hour or 30 minutes to enter, as long as we are in 4 hours or even 15 minutes, to look for a sign to sell. If it comes here again, you also look for sign to buy. But some people maintain their time frame, like here. When this market got here, if somebody enters here, the person will, the stop loss would have hit. But from here, the person would have made some money. If you enter here again, your stop loss here, and target your take profit here, you make some money here. So you now, if you at the close of this bearish candle, you enter again, you now put your stop loss here, you have made another money. Then from here again, at the close of this bullish candle, you enter again, put your stop loss below, just few pips below the low of this candle. Then you also target this area, you still make some money. But once it took this area out, look at what happened. It took it out, we wait for a retest. Look at the retest here. You enter here. Once you enter here, you now make your money. You enter your trade here. Your stop loss will be below here. Look at your entry here. So you can target the next swing high. This is the next swing high. Then you now just put it few pips below it. So a few pips below it will be somewhere here. And if you persevere, you make the money. And if you check the win-loss ratio, you find out that this is even about 10 times what you have lost. Okay, let's calculate it. We are going to calculate it. You enter this trade at 1.0731. then your stop loss is 1.0708. So 31 minus 7 will give us about 2300 about. Okay, 31 minus 7 about 23 or 24. Okay, so we have about 24 pips. Now let's check where our take profit is. Okay, from 1.073317, then our take profit 1.0842. Wow, this is above 100 pips. So we risked 24, let's say 25 pips. We risked about 25 pips, pursuing 100 and about 110 or 20 pips. So if you check it out, at least it's about 1:4. So if anytime you make a trade, you lose, maybe you are losing $25. When you win, let's say $100. You find out that even if you lose 5 times and win 5 times, you are still highly profitable, because that 5 times you are losing, if you multiply 25 by 5, it will give you 125. Then if you multiply 100 by 5, it will give you 500. 500 minus 125 will now give you about 375, which is a very healthy profit. So that is all about it. That is all about market structure. So the structure of the market matters. When you want to trade, you check what the market is doing at that point in time. You check exactly what the market is doing. Let me repeat. At this point now, the market is ranging between this area and this area. So until it breaks it, once it has not, the market has not broken this area or this area, all we need to do is just to wait for the market to come to this point. We now look for opportunity to enter our selling trade and target this area as our profit. And once it gets to this area, we look for another opportunity to target our buying opportunity and also target this area. So let us analyze it more. We are on 4 hours. Let us go to 30 minutes. Okay. So let's go to like 30 minutes. Okay. So that to minimize our loss. Okay. Look at the area. Okay, that is not giving us all the candles. Okay, look at it here now. This market came down here and moved here. Look at the opportunity for somebody to enter a buying trade, a selling trade, not buying trade. Look at it here. Because we know that the market was here, it tried to move up, it couldn't. So it came here again and it tested the area. And with this huge rejection, that's an opportunity. This has to trade a ranging market without any indicator. If we had entered here, put our stop loss, this is the high of this candle now. So put our stop loss few pips above it, maybe about 3, 4, 5 pips, something like this. Okay? So we target, look at where the market, then we now target few pips above the low, something here. So let's check, because before you make any trade, make sure that your reward is at least ×2 of your risk. Let's calculate our risk now. This is where our risk is. We are entering this trade at 1.0738 and the high is 1.0761. So few pips above it, we have 1.0764. 64 minus 38. If you calculate it, I don't know what we give. Let me get a calculator. Let me get a calculator. Okay. So we have what we are going to calculate. We have 64 minus okay 38. 64 minus 38. It is giving 26 pips. So let's check our reward, our take profit. So our take profit, we are going to do it. This is 1.0738. So 738 minus 673. Okay. 738 minus 673. 65. Remember that our risk is 26. So this is more than times 2 of our risk. Exactly. Because if we divide 65 by 26, we check what it will give us. So 2.5, which is a very good one. So assuming we are trading with 0.1, giving us each dollar we give one, each pip we give $1. So we are risking $26 to make $65. Okay. So in this situation now, we have won this one. If we entered here, we have won this one. Look at after how many days we enter this trade here. Then the first day, nothing happened. The second day, nothing happened. The third day, yes, it continued. And immediately, our trade has moved significantly. We put our position, we move our position to break even. What do we mean by break even? This is where we entered our trade now. It tried to move down here before, move up, but it has not taken this high. So our stop loss is still intact. Then immediately it has broken down, it has broken this area. It took out this area. So we now move this stop loss, we move it down to this area, even some pips below it. By so doing, we have covered both the cost of spread and the commission if you are using a broker that charges commission. So what we are doing now is a free trade. We just go and rest. By and by, we are not going to lose again. So after this is the first day, second day, third day, the fourth day, we made our money. So once we have made our money here, then we now look for another opportunity. Oh, sorry. I've removed my, okay. Good. So once we made the money, we now look for another opportunity. How are we going to look for the opportunity? If you check, this candle is too huge. We can't enter here. This bearish candle is also too huge. The next one that enters it, it didn't the bearish one dwarfed it again. So we are not still going to do anything until we now have this candle here. Then it moved down again here. When you see this kind of candle, this candle now, no matter that in the opening, okay, look at what happened. It opened here, moved up to this area, and it came down and closed here. So this is an opportunity. We can go down to 30 minutes and look for an entry or wait for the next candle. So the next candle, what happened? It was a very bullish significant candle. So when we enter here, we enter this trade here. So put our stop loss. Our stop loss is going to, some people will put their stop loss below this candle, but it is not advisable. Stop loss should be here. So let us check if it is at least times 2 of our profit. So if we're entering here, this is 1.0693. This is 1.0670. So 93 minus 70 will give you 23. So our loss is 23, assuming the market goes against us. So let's check if we have the potential of making 23 times 2, which is 46. Let's check. So we now check the recent high here from this ranging market area. Look at it here. Okay, this is the most recent. Remember what I told you, we put it a little pip below. Okay, here now. So let's check. Here is 1.0744. So 44 pips. This is 1.0693. Okay, 7 pips here and add here 51. Yes, it is more than 2 times our risk. So if we enter this market here, put our stop loss here, then the next day our take profit would have taken a very good hit. Have you seen it? We have won 2 times. The first one we won 65. This time around we won about 51. Okay, we now still look for an opportunity. Now we now have another one. Look at this huge candle. Look at this huge bearish candle. Before we enter, again we are going to check. Okay. We are now going to check if it can give us at least times 2 of our risk. So in this situation now, this is where our entry is supposed to be. Then yes, our stop loss should be here. So let's calculate. Stop loss is 1.0748. Entry is 1.0729. 29 minus 48 will give us what? 38, 49. Okay, 19 pips. Okay, we have 19 pips. So let's check. The recent swing low here is around this area. Okay. Look at it here. Good. So we move it up a little to avoid missing our target. Okay. So let's check. If we enter here, 1.0729 minus 729 minus 693. Let's use our calculator. 729 minus 693 will give us 36. So as you can see now, it is not up to 2 times our risk. Some people we take it as long as it is more than 1.5, but I don't advise it. So we leave it. Fortunately for us, it gave us another opportunity. The next day, look at what happened. Okay, even the same day itself. But we can't enter at almost at the close of the market. We can't enter here. So this is the opportunity it gives us again. So the high of this should be somewhere here. So let's check if this one goes. 1.07318 minus 1.0745 minus 731. Okay, which is setting as 45 minus 31. 45 minus 31 should be 14. Okay, our loss here is 14 pips. Then our target should be here, which is we check 731 minus 693. Okay, 731. Let's pick our calculator again. Okay, let's pick our calculator. Oh, sorry. Okay, I want to pick my calculator. Okay, look at my calculator here. Good. We're going to, this is our entry. Okay, 731 minus 693. 731 minus 693. Okay, 38. So 38 divided by 14, which is our risk. 2.7, which is okay. Remember, no loss yet. Okay? So, this is where it got now. When it got here, we now enter, because we now have another opportunity. We enter here. We have won 3 times. So we enter here. We pick our low as here. Then our take profit now this time around will be the swing low of this one, which is here. So we enter there. The market moved up. Then it took us out. We have lost. How many? Let's check how many. We entered at 1.07. Okay, 1.07. Then here is 1.0689. So 700 minus 689, which is about 11. So we lost $11. Yes, we lost $11 here. Remember the first one, we have 165 pips, 152 pips, one about 38 pips. Then the fourth trade we lost. Okay, then when it moved here, but if we are monitoring our trade, when we see this kind of, if we see this kind of, because look at what happened. It got here, try to come down, form again. So maybe we would have exited the trade or put our trade to break even. But assuming that maybe we are not on the system, we are not watching it, then we take 11 or 12 dollars loss. Okay, so it moved down again. This time around, it took out this low now here. But when it took it out, there was a kind of big rejection. Okay, so when we see this rejection, look at, this is a very big rejection, and remember we have something here already. So we still take our trade. We take our trade here. We take it here. When we have taken this one, then our stop loss will be below the low of this one. Let's check if our risk, our reward will be at least 2 times. So here we are entering 1.682. Stop loss 1.0665. Okay, 82 minus 65. Okay, 82 minus 65 will give us about okay, 72 is 10, then 6. Okay, about 17 or 18 pips. Okay, now let's check. Okay, our take profit should be here, which is 1.07411. This our entry 1.0682. So here we have $18 plus $41. 741 minus 682 will give us about 59 exactly. So 59 divided by $18, our loss, assuming it goes against us. Okay. Okay, we have okay, 41 plus 9 is 49. Okay, 59. So 59 divided by 18 will give us what? Wow, this is 3.2. So now, as you can see, remember all our trades, 4 trades. We have entered 5 trades now. The first one we won $65. Second one we won about $51. Third one we won about $38. Then we now lost about $12. Oh, okay. Let me calculate it again. First trade was $65. Second trade was 51, which is 116. Third trade was 38, which is 154. Then minus the 12 we lost, so we're having 142. Then plus 59. So 5 trades, we lost $12 but made $201. So this is how to trade a ranging market. Now immediately our take profit has hit, then it moved up here. Once here has been broken, so we don't have, it has been broken now. So this range market entry is no longer viable. Yes. So all we need to do now, we now try to enter on a discount. So I will remove this one. This discount now, we check where it started moving, which is somewhere here. This is the Fibonacci I'm talking about, which I will teach. I will teach you in one of the next lessons. Look at what happened between the 61.8 and 78.6 levels. These are the areas now, but if we can, and we still have, if we can mark something here, because this was the last point, the last area before the market took a kind of dive, a kind of root jump. So it came back this area, and this is where we are supposed to enter the trade. Because check out here, we would have also entered here, put a stop loss here, but the market would have lost a little dollars. When we now repeat it here again, from here the market started moving. Look at what happened. The first day, the second day, it took out this, it continued. So that is how to trade. Any questions so far before we call it a day? But before we call it a day, let us recap. What I taught today is about market structure. I told you that we have 3 types of market structure, even 4. The first one is uptrend. Second one is downtrend. These are the different types of market trends. Then we now have the one we call ranging market. The one, a situation whereby both the buyers and the sellers are equal. We now have the last one called choppy market. That one is a no-go area. Nobody can do. I don't know. Let me search if I can see a situation whereby, okay, yes, see this area now. This is a choppy market. Look at what is happening. You don't know whether it's going up or going down. Something like this. Yes, if you are basing it based on the, maybe if you want to trade based on this price action only. The market moved up, but from what we are doing, somebody can enter a buying trade here. There's a situation whereby the market will be choppy even for a day, 2, 3. So that one is not readable. In such markets, we sit at the fence. So that is it. Uptrend. When we talk about uptrend, if you talk about uptrend, where the look at the kind of uptrend from here. Okay, the market moved up here. It came down. They couldn't take out those lows. It moved up. It took out this high. It came down. It couldn't take out this low. It moved up. This is the up here. This is the low. It couldn't take out this low. But when it got here, they are now equal. Once a market fails to take out the next swing high, it may be an opportunity for reversal. But before we can call it as a kind of reversal, it should take this one out. But instead of taking that, once it came here, it continued moving up. Can you see it? It continued moving up. So another area, this is another low. So the market continued moving up. Then this was the swing high. It busted this swing high. Then until it got here. So here now, look at what happened. It now took out this area, had a retest. So a downtrend has started forming. Look at it. It continued. So that's how the market can go from uptrend to downtrend, then from downtrend to uptrend again. Thank you so much. We call it a day today. If you have, I will now wait for about 3 minutes to wait if there's any question I can trash before I close. Yes, but if not, maybe if after going through you can rewatch you can rewatch the video, then ask your questions, write your questions here, then I will make sure that I will answer you. Next time we're going to treat trend lines, resistance and the support. This is what we are going to treat next time around. Then I will get you informed when it will be. Then I will now have to schedule. Then I'll give you the link as usual. So have a nice day. Waiting for questions. I have a minute left for questions. If I don't see any question in the next 1 or 2 minutes, we are going to call it a day. Thank you so much. If you like what we did today, then don't hesitate to like and comment and share to your friends and encourage them to visit our channels. Then if they find it useful, they can subscribe. Thank you so much. I'm free to serve you. Remain blessed. No question? No question? Okay, we call it a day. God bless you.